Welcome to Economic Outlook of Pakistan for week ended May 7, 2022. Once again we'll start on a lighter note. Imran Khan's led PTI party lawmakers received their salaries this month even though they had quit last month. Sounds strange but true. Economy of Pakistan is in a turmoil. This week we'll cover certain aspects of international effects on our economy such as rising oil prices internationally, and how Federal Reserve of USA is hiking interest rate, and what that means for Pakistan and its depreciating rupee. More bad news to follow. Foreign reserves have further fallen and trade deficit has widened. Today we will start with corporate health in Pakistan. This is where we are today. This particular point does not represent a fishhook, therefore don't even think about making small gains. Stock market has crashed and it is unlikely to show signs of recovery unless the good news comes. After the good news, share prices will start rising very slowly. Here's an advisory for you guys. When a bad news hits a stock exchange, prices fall for a long period and good news takes more time to cause an uptrend. Right now wise guys can make share purchases eyeing long-term gains as prices are low. Further, condition is so dismal that investment in call or put options is also not advised. When it comes to share prices, perception plays a major role as markets only try to make a fool out of you. Perception right now is that U.S. Federal Reserve has hiked interest rate. High interest rate to tackle inflation results in lower corporate profits because borrowing becomes expensive. State Bank of Pakistan is also likely to hike interest rate once again, and that would cause serious losses to borrowers and corporate profits and gains will suffer most. Therefore, don't even think about a healthy stock market for a longer period this time. Fear of backlash and loss of popularity is the only thing preventing government of Pakistan from making unpopular decisions, and result is that economy is under severe pressure and country is suffering. Freezing oil prices despite international surge is caused a 76 billion Pak rupees loss to government. This loss will continue to rise. Dwindling forex reserves, dried fiscal cash position should be an eye-opener, and government must not wait a second to revise oil prices. Due to U.S. Federal Reserve interest rate increase, Pakistan rupee will further fall. Trade deficit has reached $39.3 billion. Inflation has skyrocketed to 13.4%. Foreign exchange reserves are now at $10.5 billion. Now situation is truly grim for Pakistan. It's time to stop rallies and long marches and only pray that foreign lenders will have mercy on Pakistan. Good thing is that Pakistan has a pro-United States regime in place and an anti-United States regime on standby to blackmail USA into helping Pakistan on a serious note, or else anti-United States regime might be installed, which has some deep vengeance for Biden administration. We'll sum up this review with some good news. For those who are scared of notices coming from Federal Board of Revenue FBR, Supreme Court of Pakistan has ruled that you cannot be asked for records or documentation beyond 6 years. Sigh of relief for many. Pakistan's MEDIQ or MEDIQ has raised USD 1.8 million. With MEDIQ or MEDIQ you can easily consult doctors online and buy medicines right away. If you have a motorbike, you might get petrol at a lower rate if the suggestion is approved. New SBP Chief Dr. Murtaza has assumed the position. Pakistan's exports to China has gone up 17% for first quarter. Federation of Pakistan Chamber of Commerce, Pakistan's top business body, has made some ridiculous suggestions. That is, a higher tax rate for the poor, and tax amnesties for the rich, and tax-free encashment of cryptocurrencies, which are banned in Pakistan. If the apex business body of Pakistan has such a low level of intellect, then one must not think positively about Pakistan's future. Thanks for watching Paki News Network.